we've evolved quite a bit in the last 12 to 18 months. So Jeff's vision was always to get into new construction, and the opportunity presented itself down here in the Southwest Florida market to start doing some new builds. And we went from 0 to 130 lots relatively quick. And now we've got, and there's permitting and all sorts of things going on, but essentially what Clickinvest has morphed into is a build to rent / build to flip company for investors looking to be hands off on new construction. So
that's awesome. Yeah. And when you last came on, so you kind of shared a little bit of background about Clickinvest and your story, but at that time, build to rent, this home building model wasn't even in existence, which is crazy. And now you've got 130 lots. So things change very, very quickly. But I guess what inspired this evolution? Can you talk about that? Like what makes you feel like this is a good model to evolve into?
Absolutely. So when Invitation Homes started buying, in 2012, 2013, I was sort of watching from the sideline. We were one of their biggest agents, helping them buy hundreds and hundreds of homes in Illinois. And I was just watching from the sideline, right? And everybody was like, what are these guys doing? And then within a few years, everybody was like, oh my gosh, they're geniuses, right?
Yeah.
So they timed the market and really capitalized on it. Well, what started to happen was when the inventory was getting tighter and tighter after COVID and the rates were still super low, we started to see the same players get into build to rent. And from a CapEx standpoint, from a maintenance standpoint, really building scale and not having to compete, right? Like that was the big thing. If you want to go out and buy 100 single family homes, unless you're buying an existing tape off of somebody, right? And then you got to go do all the due diligence to run through all those houses and make sure they were even rehabbed correctly. Are they being managed correctly? What do you get, right? These guys can buy, a ton of parcels and just get working with very little effort. When I say very little effort, I mean in terms of the acquisition component, right?
Right.
As long as it fits the box, you can go scoop up as many as you want. And we were hitting a time as a company where it was getting so hard to lock up deals for our clients. Because our traditional model was brokerage. So we had a bunch of investor clients and we gave them all these tools to submit offers within seconds when properties hit the MLS, and we were still losing. And especially in the Florida market, we're competing against iBuyers, hedge funds, or investors with their own tools. And these guys a lot of them were overpaying. So we just didn't stand a chance. So it was one of those moments where as a company, we had to decide, like, if we want to be here for the long haul, we need to have more control over our destiny, and trying to pick off deals off the MLS was not going to be it. Actually, we prayed about it, Jeff and I, and Jeff's vision was always to get into new construction. And we said, what if? Let's go. And it just took off. And the clients that were not having success scooping up deals off the MLS and whatnot jumped in head first. And these are the guys that are experienced, so we knew we had something when big players were jumping on the bandwagon very quickly. So.
Yeah, absolutely. That's awesome to kind of monitor the market, monitor what these guys who have many millions of dollars in market research are doing, because they probably have figured out something that maybe others haven't, and then set up your systems, which is where I know you excel, to kind of mimic that. So I've done 2 deals with you now. I bought 2 lots, so my money is where my mouth is on this. I'm a believer in this model. But for others who maybe have thought about this, but really don't understand how it works, maybe they're an investor out of state and kind of just are curious. Can you kind of walk through the process of how you work with an investor for this model?
Absolutely. So the first step is confirming that this is something that you should even do, right? Unlike traditional flips and even, you know, if you're buying a rental and you want to hold on to it, or you want to do the BRRRR strategy, whatever, the outlay, so the money you're putting up isn't that much, right? So if you're buying $100,000 property, even now with how things have changed with lenders, I mean, what are you going to be in it for? 30K, 40K, you know, somewhere around there. New construction requires a lot more cash out your pocket, because, you know, with a single family, when it comes to draws, you can go out there, you know, you can do demo and get a drawer right away, and then, you know, recoup your cash, and then you're on to plumbing or electrical and recoup your cash. With construction, there's so much money that goes out the door, right? First, you've got to purchase your lot cash. It's very hard to get financed on dirt, right? So you're out 40K. Then just to order trusses, for example, could be anywhere from 13 to 20K, depending on the type of model. And trusses can take 7 to 8 weeks to get delivered. So you've got to put that money up. And then for us to get a shell contractor, plumbing, electrical, excavator, all that committed, we've got to put the money up, right? So it's not uncommon for a client to be out $100,000 just on the construction before they could even request a draw from the lender. So it's a much different clientele. So that's the first checkbox, is we tell clients, like, you got to have the liquidity there, because this isn't something that you get stuck and we're just going to eat it. In total transparency, that is not our business, right? People are always like, well, traditional builders will cover the cost and this and that. And yeah, and you're also paying $200 a square foot when the product's done.
Yeah.
Right. So to get it at a discount, we can't finance the investor. You have to go get your own financing.
Finance
right?
130 properties. Yeah.
Exactly. And people are like, I don't understand. Okay, well, you know, just simple math. So the first thing is make sure that you have the liquidity and you have the stomach for it, right? In new construction, in total transparency, you know, we're telling clients 9 to 10 months, you know, from the time you close on it to the time you get keys handed to you. If you know anything about Southwest Florida, I mean, there were huge permitting issues that a lot of municipalities are ancient and had a restructure and launch new software, new systems, whatever. So we dealt with a lot of permitting delays, and then we had a jerk by the name of Ian interrupt things for quite some time. Hurricane Ian. So we had some major delays on permitting, and now, thank God, things are on track. And I could say with confidence now that when you close, barring a new product like a duplex, right? If it's a floor plan, which we did get masters on today, thank God.
Nice.
So when you do have the floor plans already in place and you close on the lot, I still feel good at this point saying yes, 9 to 10 months, because we've worked out a ton of kinks. We have permits that have gone in November 29th that were already getting approved in the Cape Coral market. So we're the first batch. I mean, there were some that got stuck for 4, 5, 6 months. It was brutal.
Wow.
So it's capital, patience, knowing that, you know, and if you've got the capital, so it's a different, when I say it's a different level or a different type of investor, it's the investor with the liquidity and the understanding that, yeah, this is new construction. We're starting with dirt, right? We're going to build a house, and there's hundreds of tasks associated with that. Third is well, really should be first, is what is your goal? What are you looking to do? Are you looking to build to flip? Are you looking to build to rent? Are you looking to build to short-term rent? Right? Because those are very, very different approaches. So to give you an example, when the rates were still low, most of the guys that jumped on board were build to flip. They're like, oh my gosh, I can flip a new construction. Like,
Yeah.
I'm not the builder. That's great. And we were teeing up back end hedge funds. So there were hedge funds that were paying, you know, 410 to 425 for a new construction single family home in the markets we're in. So we're like, wow, if the client's all in for around 300, you know, and they could sell it for 420.
Yeah.
that works.
How many can you do? Yeah.
Exactly. So we had guys jumping in like crazy. And then the rates started to creep up, right? And then hedge funds were coming back and saying, well, we're not going to write until you're 3 months out from certificate of occupancy. So the hedge funds are still there, but now the game's changed a little bit. So instead of us being able to write a contract 9 months, it was literally like you close on the lot. As soon as we get out of permitting or close to that, the hedge funds would submit an offer and sign a contract on your house. Now it's nope, 3 months prior to CO. So, and the numbers we won't know yet. I mean, we're getting closer. But that was a huge draw for a lot of those investors, right? Because I don't like uncertainty. I am hate to say a pessimist, but or realist, whatever you want to call me.
Realist sounds better.
Yeah, I hate risk. I hate risk. So for us, the dream was flip to hedge funds, done. Get a contract the second you come out of permit, easy peasy. I do not like speculating and, oh, we're going to go build a house and then put it on the market and see what happens. No, thanks. Yeah. So the flip game has changed a little bit, obviously. The long-term rent game, rents have crept up. So down here, that's helped obviously with rates going up. But costs have come up as well. So it really depends on what your long-term rate is going to be and for it to still make sense or not for those investors. The short-term rent is still, I think, knocking it out of the park in terms of, like, we have relationships with Vacasa. Familiar with Vacasa?
Yep.
Of course you are.
Yep.
You're the short-term rent guy. How can you not? And like they've underwritten a lot of the stuff that we're putting out, and they're like all about it.
Nice.
So yeah, so they've underwritten it. And then obviously we use like AirDNA data as well. And then we have clients jumping all over that product in Cape Coral. And then a guy I know is going to try it in Port Charlotte.
Yeah. I've heard that's the next big thing in Florida is Port Charlotte.
Yeah.
That's what they keep saying.
Yeah. Do you have something on the wall back there that says Port Charlotte? No.
Yeah. Yeah, no, that's where my 2 lots are that you guys are working on. And I'm excited about it. I actually have never been to Port Charlotte physically, but I've done a lot of market research. And the numbers, like you said, the numbers just seem to make sense, especially with the duplexes, in my opinion, building the economies of scale. This is what I, preach to my community, that, if you can get one set of expenses on a property, but yet have the economies of scale of multiple income sources, whether it's a duplex or a tree house in the back or a yurt or a garage that you just convert to a separate unit, the cash flow tends to be pretty phenomenal. So our model is building a duplex. We're turning the garages into an additional bedroom, or we're calling it a family room. If we use it as a bedroom, that's our business. And then the pool in the back, the shared pool. So that's what we've gone with, and I feel like that's kind of like the ideal model for our setup. So can you kind of share the example numbers of what you're seeing? I mean, I know you kind of mentioned generally what it was previously, but I know numbers have changed a bit. So what do you anticipate at this point?
So I'll speak to the single family first, right? Because that's what we're doing most of. So we came out with a larger model. So when we first started, we thought we were going to stick to like 1,300 square feet. We thought that was going to be like little houses and do a bunch of them. Well, nobody wanted, I don't want to say nobody, all but, or 6 people wanted the 1,300, nobody else. So we're like, all right. So then we came out with a 1665 4.3, because again, we look at what the hedge funds are doing, because we don't want to be the biggest house. We don't want to be the smallest house, which is, I guess, why the 1,300s went away. But we want to fit the institutional buy box, because we always have to think about an exit, right? At some point, if we had to sell it or wanted to sell it, who's our buyer? And these hedge funds are cookie cutter. They look at the same buy box every single time. So after we started to get going, we came out with a 1767. So we're discontinuing the 1665, and now 1767 is our plan. It's a 4-3, has a lanai off the back, and then we're dropping a pull in the back. So to do that, you're at 369 roughly is the build cost for the 1767 plus the pull in the back. That's what you're at for a single family.
Nice.
Now,
not including the lot, or does that include the lot?
Not including the lot.
Okay.
Not including the lot. So let's just say you're all in around 4, right? Somewhere around there. ARVs for those could be anywhere from 500 to 550, depending where you're at. And then I looked at this yesterday. I mean, the rates in the high season, the daily rates are anywhere from 300 to 500 a night. So when you do the math on that, one of our biggest short-term rental buyers is, I mean, he's anticipating like 10K gross in the high season per month. Vacasa underwrote these at 2.25. I think their occupancy was a little lower, but it's fine. Like AirDNA came out with an occupancy of 71 to 74%.
Okay.
Vacasa was at 61%.
Okay.
That's where they were at. Vacasa was at 2.25 a night. AirDNA, I think, was anywhere from 250 to 265 a night. So
for the single family.
Correct. Yeah, for the
Okay.
single family.
Yeah. And that's average across the entire year.
Correct. Yeah.
Okay.
Because obviously in the winter months, it's ridiculous. I mean, people spend 10K for the house, and you get a lot of monthly snowbirds that come down here, and that's what they do.